This is VeriScope News. Verified news, clear context. Each report focuses on confirmed data. Each explanation avoids opinion. Each segment is built for clarity and accuracy. This channel examines economic developments using official sources. The goal is understanding, not reaction. The tone remains calm and factual. Today's report reviews recent U.S. consumer spending data. The information comes from the Bureau of Economic Analysis and related federal sources. All figures are stated clearly and in context. Consumer spending is the largest component of the U.S. economy. It represents more than 2/3 of total economic activity. Changes in spending patterns influence growth, employment, and prices. They also affect business revenues and government tax receipts. In recent years, consumer activity has played a central role in shaping economic outcomes. Periods of expansion have often aligned with sustained household spending. Periods of slowdown have often followed pullbacks in consumption. The latest data covers spending in October and November. These months are important because they precede the year-end shopping season. They also follow a strong economic growth earlier in the year. The data release was delayed. A federal government shutdown disrupted data collection and reporting schedules. As a result, October and November figures were released together. Despite the delay, the data provides a clear snapshot. Spending remained solid across both months. The broader economy continued to expand at a strong pace. U.S. consumer spending rose 0.5% in November. It also rose 0.5% in October. The Bureau of Economic Analysis reported these figures on January 22nd. Economists surveyed by Reuters had expected a 0.5% increase for November. The reported number matched those expectations. Consumer spending includes purchases of goods and services. It covers items such as food, clothing, housing services, healthcare, travel, and entertainment. The combined October and November data release followed a 43-day government shutdown. That shutdown delayed the publication of several economic reports. Earlier the same day, the Bureau of Economic Analysis released updated growth data. The economy expanded at a 4.4% annualized rate in the third quarter. That followed a 3.8% pace in the second quarter. The Atlanta Federal Reserve is tracking incoming data for the fourth quarter. Its current estimate points to a 5.4% annualized growth rate. This estimate updates as new data becomes available. Officials noted that consumer spending remains a key driver of growth. A narrowing trade deficit also contributed to recent expansion. At the same time, economists observed uneven spending patterns across income groups. Higher-income households continued to spend at a stronger pace. Lower and middle-income households faced tighter constraints. Consumer spending has long been a stabilizing force in the U.S. economy. Over the past 10 years, personal consumption expenditures have averaged steady growth. During expansions, spending growth typically ranges between 2 and 3% annually after inflation. In recent quarters, spending growth exceeded those longer-term averages. Several factors contributed to this outcome. Labor market conditions remained relatively firm. Employment levels supported household income for many workers. Wage growth improved in several sectors. Household balance sheets entered this period in mixed condition. Some households accumulated savings during earlier years. Others faced higher debt servicing costs. Inflation trends shifted during the fall months. Headline inflation eased in October and November. However, this moderation was influenced by data limitations. The government shutdown prevented full data collection for the Consumer Price Index. Import price data was also incomplete for October. These gaps affected downstream inflation measures. The PCE price index relies on several inputs. These include the Consumer Price Index, the Producer Price Index, and import prices. To address missing data, the Bureau of Economic Analysis used statistical methods. Seasonally adjusted price indices for October were derived using surrounding months. Non-seasonally adjusted indices applied historical seasonal factors. These adjustments allowed publication of the PCE price indices. They also introduced additional uncertainty around short-term inflation readings. Household spending increased overall. However, the gains were not evenly distributed. Higher-income households showed stronger spending growth. They increased purchases of luxury goods and services. Travel and tourism spending rose among this group. Lower and middle-income households faced more limits. Higher prices reduced purchasing power. Substitution options were narrower for essential goods. For many households, spending focused on necessities. Discretionary spending showed less flexibility. These patterns reflected differences in income growth and savings buffers. They also highlight uneven exposure to price changes. Prices increased at a moderate pace during October and November. The PCE price index rose 0.2% in each month. Over the 12 months through November, the PCE price index increased 2.7%. That followed 2.7% increase in October. Core PCE inflation excludes food and energy. It also rose 0.2% in November and October. The 12-month core rate increased to 2.8%. Inflation data for December suggested some firming. Economists estimated higher monthly increases. Official December PCE data will be released on February 20th. Price trends affect real purchasing power. They also influence interest rate decisions. Strong consumer spending supports employment. Businesses respond to demand by maintaining staffing levels. Sectors tied to services benefited most. Travel, leisure, and hospitality saw continued activity. Retail employment remained sensitive to seasonal patterns. Labor market conditions remained relatively stable. Job growth moderated compared to earlier peaks. Wage gains continued in select industries. Spending strength among higher-income households supported jobs in premium segments. Spending constraints among other households limited broader spillovers. Household savings varied by income group. Higher-income households retained greater financial flexibility. Lower-income households faced tighter budgets. Investment decisions by households reflected these conditions. Spending on long-term goods remained selective. Housing-related activity responded to financing costs. From a macro perspective, consumer spending influenced business investment. Firms adjusted capital plans based on demand signals. Financial markets monitored these trends closely. Spending data feeds into growth expectations. It also informs assessments of inflation persistence. Businesses experienced steady consumer demand. Retailers benefited from consistent spending in core categories. Luxury brands and travel-related firms saw stronger performance. Companies serving price-sensitive consumers faced margin pressure. Input costs remained a concern for many firms. Tariffs and supply adjustments affected pricing strategies. Businesses balanced pricing decisions against consumer tolerance. They also monitored inventory levels carefully. Overall, spending trends supported revenue growth. They also reinforced the uneven nature of the expansion. Economists are monitoring upcoming inflation data releases. The December PCE price index will be released on February 20th. Labor market reports will provide additional context. Monthly employment data remains a key indicator. Retail sales figures will offer further insight into consumer behavior. These reports break down spending by category. Federal Reserve communications will also be reviewed. Policy statements reflect assessments of inflation and growth. Gross domestic product updates will refine fourth-quarter estimates. These figures incorporate revised consumption data. Trade data will show whether the narrowing deficit persists. Import and export trends influence overall growth. Each data point adds clarity. None provides a complete picture alone. The data shows steady consumer spending. It confirms continued economic expansion. Spending strength is not uniform across households. Income differences shape consumption patterns. Inflation remains above the Federal Reserve's long-term target. Recent readings reflect both price movements and data adjustments. Economic reports are interconnected. Delays or gaps in one series affect others. Understanding the structure of the data helps interpretation. It explains why short-term changes should be viewed carefully. This report provides context for recent figures. It does not offer forecasts or advice. Economic data relies on seasonal adjustment. These methods account for recurring patterns. When data is missing, agencies apply statistical techniques. These techniques use surrounding periods and historical factors. These adjustments allow continuity in reporting. They also introduce temporary uncertainty. Revisions are common as more complete data becomes available. Updated figures often replace initial estimates. This process is standard across economic reporting. It supports consistency over time. This has been VeriScope News. Verified news, clear context. Thank you for listening. The next report will continue to focus on confirmed data and careful explanation.